Good morning, Forex traders, and welcome to a new episode of the weekly Forex Outlook. This is your host, Fri-Feb10th, founder of trendfollowingformula.com. In the weekly Outlook, we will go through the weekly calendar to get a clear vision for the financial week's terrain. We will then take a look at markets structure, viewing price action and correlation across currencies, commodities, and stocks. Finally, we will conclude with TFF's bullish and bearish list for explosive markets that we can easily consume with minimum confrontation and the maximum profit. So with no further ado, let's listen to this week's Outlook. Good morning, Forex traders. This is Fri-Feb10th, founder and CEO of TFF. Today in the daily market review, we are going to talk about interesting things. It's really very cool day, Friday, the end of the week. However, we should see a very strong reversal in the market or a continuation. Now we have been talking about the dollar index for a week, and we have actually maybe more than that actually for a few months now, but mostly the last week every day we are talking about the dollar index, as it's the regulatory for all currencies actually and commodities. Dollar is mostly having the dollar usually has a negative correlation with everything, so with commodities. So whenever commodities go up in price, you will see that the dollar is actually declining. Whenever the dollar goes up in price, usually you will see commodities are declining, and that's obvious usually in gold, for example. Usually when gold is up, you will see that the dollar index is declining. However, with the US stocks, usually the dollar represents stronger currency. Certainly it's a currency and it's stronger currency. The dollar index represents that, and that means that the economy of this country is actually better. The United States of America is better. Usually that get accounted with better stocks. Let's move now very quickly to the calendar and view what we have for today. We have actually just one number today. Yesterday, if you notice that the unemployment claim came positive, it's less than expected, 234, and usually this number represents strength in the economy. It shows that less people are claiming for unemployment. That means there are more jobs, and this is actually very good thing for the currency. And the result, as you might have noticed on the chart, a continuation in the SP in the dollar index, as you noticed. However, if we come back to the calendar today to view what we still need to today's number, we have 3 p.m. GMT. That's about 5 hours from now. UOM customer sentiment. That news or that number is not really very pivotal. Like you wouldn't see huge reaction to the market on that number. On Unfortunately, that calendar doesn't give so many clues, so I think we need to rely solo on the chart. As we mentioned for a while now, the dollar index is in a downtrend, as you see on the chart. It's very hard to argue against that. It's very, very clear downtrend. It's not a sideways even. However, it has that corrective characteristic that we mentioned before, and usually these corrective characteristics resolve with a break from that correction to presume the previous trend, which was basically an uptrend, as we mentioned before. That decline have been in a channel, as you see, and that channel was a very straightforward trading. Once we exited that consolidation, that sideways movement, and we created a low, higher high, lower low, lower high, anything after this point, after that point here, anything should be traded, either break, okay, or a correction and sell. So how many trades have we got here? We have got one trade, okay, we had the second trade, and we had actually a third trade. That third trade is basically has a stop above the 101, as we mentioned before in the previous video. This is a downtrend. You need to sell on the short term. Yes, on the midterm, you need to be bullish on the US dollar currency. However, we are now on a short term downtrend, and we need to sell the currency, and you cannot really do anything else, because otherwise it's going to be a gamble, because many people just decided to buy the US dollar over of that support. If you bought it here, you are now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days actually trapped. It's better, if you wanted really to trade something like that on the long term, is actually to wait for better support to buy on. But if you are trading on the short term, which actually many traders do, you would trade whatever style you want. However, if you are trading on the short term, it is very important to sell that market, unless we break above the 101, as we mentioned. That reflects actually on other markets like gold, for example. In that way, if you notice, the gold have been climbing up for the previous few days, and in reaction to yesterday's move on the SP 500, the gold is actually retrieving back. If we notice, gold have met a resistance. That was the resistance that we mentioned previously. That's resistance level, and it started to decline again. Are we gonna be short on gold? No. Basically, it's a very strong uptrend so far, and if we put the 4 hours chart, we haven't broke significant previous low. This certainly is a low, okay, but this is not a significant. You need to measure lows from the same magnitude. What does it mean? 1, 2, 3, 4, 5. Okay. This is not 3, to be honest. That's not actually a wave, elite wave counting, because usually the wave wave 3 shouldn't be actually the shortest, should be actually the longest. However, if we will count just 1, 2, 3 impulsive waves, you will notice that this and this low, these are significant low from the same magnitude. Okay, so if we will really go below 1, 1208, sorry, 1206, this is where we will need to consider a reversal in that market. This is very, very, very long. Stop. It's very, very big stop. To be honest, it's gonna be really hard to trade that. If you want, for example, to enter now and to put your stop below that. However, this is what actually needs to be considered. In that case, I would actually only, based on that type of resistance, the type of movement, that's not price action now, this is pattern recognition. Based on that sharp decline, I would consider in relation to how much time did it need to climb up and how much did it need to decline. If we use that trusty tool here, taking the same level, we needed 3 days to climb up 2%, and we needed 16 hours, which is like half a day, to decline the same amount. That by itself is an indicator for me that we might not consider longs anymore on gold, okay, unless we break that high. If we break that high, that means we could actually join gold in an uptrend, in a continuation for the uptrend. DXY, which is the dollar index, is creating higher highs on the short, very, very short intraday time frame, which is like on the 4 hours. However, on the daily, it didn't break a previous high. So we have really so many mixed signals in the market now, and it's kind of hard to determine what to do. I cannot very much say yes, we have to do that. It's very hard. And once this kind of confusion happen, it's very important to decide, from my opinion, to cease trading and to stay, sit on hands and just watch the market. Basically, you just watch the market, because participating in such trend reversing point, you cannot know. Usually trends continue their like trends continue, okay, until a certain big event happened, and that certain big event should not be actually on some sort of news. It needs to be a very powerful consolidation volatility area that market reverse on, and you need to notice this on the chart. And in trading in this area is very devastating, because if we had two good trades on that down trend, actually, sorry, not that one, these two trades, you will lose a lot of money now trying to predict the new trend, because you need to decide if you are a trend following trader or you are a sideways trader. Your targets are like a 20 pips, or your targets are like 600 pips, 300 pips, 150 pips. So if you are a trend following trader, you need to really wait for a confirmation for the new trend. So usually you will notice that for trend following traders, you will be out of the market for longer periods of time, waiting for that nice trend to build up. If we have a quick look on the SP 500, you will notice that the market is rallying. There is no any issue with it. That's an uptrend. And this is something that we were talking about for a week now, and we recommended to have a better look on the SP 500, Dow, American stocks generally. They are really healthy now. One of the examples is Apple. That's Apple. I wouldn't really argue with this. These are impulsive uptrends. If you are gonna enter to that market, you don't need really to enter and hold forever. If you want that, if this is your strategy, you need to have very strong fundamental reasons, and if you are happy with this, it's right. However, for me, I would prefer to enter for maybe like few hours up to 2 days. In this case, I will enter and exit by the end of the session. If we look at the 4 hours chart, or maybe the 30 minutes, actually much better, because not many data actually needs really. So if you look at that, that's a really interesting uptrending market. You need to, based on the strategy that you're trading upon, if you are trading breakouts, that's fine. If you are trading corrections, that's great. For me, I trade usually corrections, so I will be buying this market after that formation. For example, I'll buy it again here. Okay, maybe on that one I will wait for the breakout, because that was really very shallow of pennant, and the target was really very good. See that? And here on that market, I would actually buy here that hammer, and then usually what is gonna happen, my stop is gonna be always below the previous low, I buy here, okay, buying here, I will put my stop actually below the breakout. This is here again, another, that's a flag. Buying in it, we need to actually wait for something. I'll just correct that drawing. As I mentioned, that's a flag. Okay. This is where it came from, so we'd expect something like that. So 133 might be the target, and this is what you need to do. Keep trading this way. Another example is Amazon. If we go to the 1 day time frame, see it's a bit choppy. However, this is a very strong uptrend. If we look at Tesla, it's the same story. So US stocks are very good now. They are predictable. You can trade on them with higher probability for your outcome, and this is actually what we are looking for. The Dow, the gold, as we said, that's an uptrend. Really predicting a reversal in the market in this area is not gonna be the best thing. Yes, there is a reversal indicator, but we usually trade with the trend. Are we going to buy? There is a higher probability that we are going to buy, but for the 4 hours chart, we are a bit skeptical about that stop. However, if we will adjust our gap, let's have a look here on our trusty Fibonacci measurement tool. That's the Fibonacci. Okay, so our target should be at 1259, and this is the way the trade should go. This is the entry. Maybe I'll use a different tool for that. Actually, there is that nice tool here. Long positions. Yes. That's a very nice tool. Actually, this is our take profit. This is our stop here. Okay, and that is our second take profit. So our first take profit, preferably we should have a take profit here in that area, 100%. Okay, so if we will get into a trade like this, that's not a bad trade. Like the profit to loss, the profit to loss ratio, the risk reward ratio is 1.6. That's very good. Okay, the only point that I'm trying to make here is you need to trade on sound direction, and predicting reversals is not a good practice. Removal here. Why? Because if you predicted reversal in that area, or just let's look at what we have here. If you predict a reversal on that area, predicting just a reversal, the question is where is your target? If you will trade this as we trade based on the previous based on the trend following formula, or the trend following strategy, you will be entering reversal here, expecting targets beyond the previous low. What I mean, you will rely on that trend. You will rely on that trend, okay? And then you will try to sell here, wishing for a potential very, very long move till 1075, which has no problem at all. But the very unfair thing, and then this is your stop loss. This is your stop loss here. No problem at all. It's very good profit to loss to reward ratio. It might be 1.7, 1.6. However, usually people, when they do that kind of trade, trying to pick tops or bottoms or predict reversals, they will try to sell the market here, or try to sell it here, looking for maybe 100 pip or 50 pip, which is not really the best thing, because usually markets in areas like this, they could rally very quickly, and you could get trapped in this kind of behavior, looking for a trend reversal point 2-3 times, because usually the trend continues. Look at that trend, for example, here. Sorry for that. Look at the trend here. The trend keeps continuing. You see, it makes lower lows, and lower highs. So what I'm trying to say in this example, it's better to continue trading with the direction of the trend, keeping the same strategy, which is a good profit to reward, a risk to reward ratio 1.6, 1 to 1.6, 1 to 2. And this is the case that we are trying to discuss here with that example. So in relation to gold, there's a huge chance that we will enter on gold for the same reason, just a trend continuation. However, when we get into this point, when we start really to prove what is in the market, we start to prove our point of view, we start really to want to enter into the market, usually that's a bad sign, and it's better really to stay hands off and not really to join the market. If we look at the Euro USD, as you see, the market is coming closer to our stop. I don't know what's going to happen. Maybe the market is going to reverse, maybe not. It's not my issue really to determine the direction of the market. I will react. I will try to take an opportunity. we are with that trend till it proves the opposite by breaking this low here at 1062. British pound is not really the best thing to trade. USD chef is actually a reverse for a mirror for the US index, the dollar index, and the US Canadian is not clear. However, that might look like a flag, and there might be a continuation up. And if we will have a very quick look on our trusty TFF tool, we will find that actually the gold is a sideway. There is actually an equal buyers and sellers, institutional buyers and sellers in gold. Euro USD, actually the market or institutions have determined that it's better. They are actually selling Euro USD, which might actually give us a clue. It's actually it's weak bearish, so there's nothing really to say here. They have decided that market should be sold, and they are selling it. Actually, that might be the reason for this decline, and it might be as well the reason for that rally. Looking at that, and actually to conclude today's market review, we are not very keen in entering the market today. The market doesn't show huge potential. Certainly there are trades, there are millions of setups that you can find today. However, as trend following traders, we feel that this period or today particularly is not a good day for us to enter to the market, unless you want to trade stocks which are very, very healthy. And as you saw, for example, the Tesla and Apple, they are very, very clear to trade. You need to just put your stop losses and to go with the trend. However, currencies, especially SP500, especially the dollar index, the euro, they don't show dramatic, interesting entry to join the market, because if we would like to join a trend, we need to have a short-term corrective move, short-term corrective structure. Maybe if I'll draw this for you here on the chart, what you need to see is a move like that, and then we need to be talking, and the market is moving like this while we are analyzing the market. Then we say, oh yeah, we need to wait for a correction somewhere here. It could be moving like this and then coming back like that, and then it traces nicely in a channel. Then we need to buy 50% or 61% Fibonacci retracement level. This kind of behavior gives us a higher probability and higher certainty that this is a market to trade today. If we don't see things like this, that means that the market is not probable. It's hard to determine the outcome. Certainly there are setups for reversals, but we use these reversal setups as a confirmation, as we use the calendar sticks, the 1, 2, 3 setup, stochastics, RSI, crossovers. We use all of these things as triggers to enter in the direction of the trend. But really using that strategy alone by itself in a vacuum without understanding the previous force, because the trend is like a force, it's like a train moving. It might actually slow down on a station, but believe me, when it picks up, it picks usually in the same direction that it started. And it's very important to determine what is that direction, and it's very important to determine that this is a healthy train. But just jumping into an XYZ chart and then picking up 1, 2, 3 setup, or picking up a Gartley formation and then jumping on it without understanding the previous forces and the quality of these forces is very, very, very tricky, and that could lead to really huge losses. And many of the traders who lose in the stock market, they lose because of these two reasons. The first one that we mentioned now, which is entering into the market with a very sound setup, however with no context. The second one is a bad profit to loss ratio, which is like somebody tried to take 20 pips but then lose 100. These two reasons, basically the second reason called money management, the first one is actually technical setups. These two elements, if you mess them up, usually they lead to catastrophic losses. But if you really take them correctly, and the right way to really deal with these two issues is just by being patient and waiting for the correct setups to resolve, and to make sure that this setup is in a good context, in a good chart, in a good trend, and that trend is healthy. If you really want to know more about these setups and how can you deal with them, if you want to know more how to define a good context, how to define a good trend, we have a very comprehensive free webinar and 3 days course you can join for free. Just put your name and your information in the link below and you will be taken into that course. It's really very nice and simple, as we explain on the chart. This is very, very simple trading techniques. It's based on one very, very hard thing, which is actually patience. You need to be patient when you are trading. It's not only about the knowledge, it's about seeing setups and seeing opportunities and rejecting them. So by that I conclude today's daily Forex review from Trend Following Formula. This was your host Sharif. But if you liked that video, or if you feel that this video is useful for you, please leave thumbs up, write a comment if you need something to be shortened, if you want me to highlight more, to talk more about certain things, if you feel that there is something more that we can bring into that video to make your experience better, please leave a comment down below and share that video, and don't forget to subscribe in the channel. Thank you very much and have a great trading day.